Let's just start then with your reaction to the deal that was signed overnight in Washington.
Well, the good news is that the downward spiral has been stopped. We have reached apparently bottom, and for business that means more predictability in order to look into the future, which is good news. But unfortunately, of course, for the likes of European Union business as well as others such as Brazil, it means that for the next 2 years, $200 billion will be basically traded between two nations without this kind of competition. And this is what we actually don't like about this. We don't know if that's WTO conform. The fact that actually it's negotiated a trade deal, they're rewriting globalization.
Yeah, still a lot of answers or questions that need to be answered. In terms of breaking this down into losers and winners, do EU companies then fall into that category of losers at this point? How do you characterize who's coming out of this the best?
Well, we have to see how it shapes up. I mean, China was told not to buy from other countries but the United States. That means we have to see what that means for our chemical business or airplanes or other stuff that we normally sell into China. China has less choice. We have to see how that shows up in prices coming into the economy here. And in particular, I think we have, for us, a tougher time selling into China. At the same time, some of our European companies are very well established in the US. They are the winners, the likes of Mercedes-Benz and BMW exporting SUVs into China.
All right, so the car makers are still looking good. Let's talk about your report here. You talk about competition. I guess there's brings up the issue of the Belt and Road Initiative, which in your extensive report, you talked about the involvement that the EU has had. What level of interest have you seen, and what roles have they played?
Well, I mean, Belt and Road Initiative is a big political scheme, but it is a bit of a spoken hub. It's certainly not multilateral. Everyone in the world knows about it, but when we ask our members, do you get more business out of it? From 1,700 members we have, about 20 says yes, a little bit. And we looked into the other side of the equation, meaning what does BRI do to our companies in headquarters bidding against Chinese companies in third markets? And that is a real challenge. So what we basically describe in the study that came out just now is the opportunities, the few there are. At the same time, we also look at the one-stop shop of China, the kind of exporting of the Chinese procurement model. 90% of the services and products in Chinese projects are always coming from China. And then we give recommendations to the European Union how to deal with this.
How do you guys want to get involved, Joerg? Can you talk to us about specific European industries that might be able to contribute to this, and what needs to happen for you to be able to realize that?
Well, we have the trains, for example. I mean, China is excellent in building infrastructure and trains, and so they reach out to the European partners for parts that they can't produce themselves. So you have a train with, say, German axles, German brakes and automation, and that gets exported as a Chinese train. And of course, on the third market, they are heading on to a competition with exactly these companies doing the same. They are presenting the whole train. We had this Siemens-Alstom merger discussion. So in a funny way, we might gain a little bit here, but we are challenged in other places. Again, Belt and Road sounded like a promising scheme, but there's very little into it for our business here on the ground.
Joerg, I'm not sure if you're able to answer this question, but in terms of some of the purchase requirements from the US, just going back to this phase one deal, it seems like Boeing may get something of a leg up on the back of this deal in terms of deals, purchases. Is there a way for Airbus to counter that, do you think?
Well, again, countering with open competition with great products. Airbus is a great product. They have to see how that shapes up. But fact is, of course, China will be struggling in order to get to the 100 billion a year. And of course, planes are a big ticket item. You have to sell a lot of soya beans in order to offset a plane. So I guess that, yes, it will be challenging, particularly for the high capital intensive industries where the US is going to compete head on with Europe. And now we get told that we can't compete anymore.